All right. Good morning. Today's Wednesday, the 1st of June. And actually, I think I did my video yesterday saying good Monday morning. Kind of threw me off. So, very simply, what we got going on really, it's all about non-farm payroll. And you'll find that every putz with ears is jumping on the bullish move up. Apparently, everybody predicted it. And now even Kramer's coming out saying it's going to be a wonderful summer. So, which I actually feel that it is. And why do I feel that it is? Well, first of all, in the short term, BTC, wrong one. In the short term, I'm screwing up a little bit. So on the S&P, I'm neutral pending this bullish break on this bear flag. Really nice, strong run up. Yesterday we had a really sweet consolidation. Maybe another consolidation or pullback. We do have this gap down here at 40.61, which I would have felt better that it filled. But, today maybe a little pullback and a consolidation. Then tomorrow on the numbers, we break that flag and run a little bit. Ultimately, I think we're going to pull back and fill that gap. And that's going to be our higher low to create this upward trend. And all of this is just speculation. I mean, really, all we know right now is we got a nice bull flag sitting there for the day. I'm looking at the futures, and we're kind of mixed, going back and forth. So can't really rely on that prediction, or at least we're not trading on my speculation. We are trading on what's going on right now. Just trying to look at what's going on with the futures at the moment. Yeah, we're only up about $7, 7 points. Everything's green. And the techs are mixed. I'm looking at Apple and it's down 50 cents. I'm looking at Tesla, it's down $5. And then you got Microsoft, Amazon, and Google up. So kind of mixed in the morning, which shows me a little indecisiveness, which kind of speaks to the idea that everybody's just chilling out, waiting for the non-farm payroll numbers to come out, get their interpretation, and then the market will move on Friday. And yeah, that's about it. That's about it. I mean, let's take a quick look at the futures and see what the futures are setting up. Oh, that's the other page. So the futures are setting up a bull flag based on today. So if today consolidates or pulls back, then we got a break of today's high tomorrow, and that will trigger the flag. This is not really a flag because I want to see that retrace and then the trigger. So, if we just push up past this, we really haven't initiated a proper or a textbook flag. So that's what we're keeping an eye on. And so, again, we're neutral on the S&P until pending that flag. Looking at the 240s, nothing exciting there. Let's go to Bitcoin. Bitcoin. On the dailies, I guess you can, if it stays around here, I mean, you got to run up a consolidation and then tomorrow break it. This could be a flag. I'm kind of neutral on Bitcoin right now. I guess just knowing that report is out there on Friday, it's kind of skewing or corrupting my perception. So I'm just going to sit back and play that. I was looking at the VIX. I had this little pennant going on over here, and we broke to it, and it looks like the VIX is going to move lower. The momentum is moving down. So it looks like everybody's going to get a little more comfortable in the market. I bet we see like 21 or so throughout the summer, which is a good uns. So that's about it. There's nothing more we're looking at. Hopefully we're coming into a quieter period. I'm looking for you son of a Siberian snake charmer. There you go. I'm looking really at a trading range here. This is the middle of the range. I'm expecting that this move up might take us up to that and then do a retrace and then carry on. Once we break the middle of this range, I think we're going to come up and maybe we'll give a test to that 4,800 um, and start a little consolidation. I'm just feeling like the rest of 2022 isn't going to put in new highs in the market. Maybe even 2023 might be a little consolidation, which would be better than the alternative, which is really, well, you know what? We hit the 50% retracement, and this is off of the July lows. And this is pretty aggressive, man. That's crazy aggressive, actually. Um, why does this chart keep doing that? I gotta see if I can default this. Let's look at the data. And let's go back a little bit. Let's go back in time. There we go. So that's a 50% retracement from that, right? From that July mark. But look at this nice consistent progression. Then we got all wonky due to COVID and everything. And then we just had this skyrocketing run. So if we fib from that low point right there to here, um, this is the 50% retracement on that. And it puts us right back. Man, that is so scary. It puts us right back. So here's the 50% retracement. Puts us right back in this basic trend, you know? And that seems very logical to me. We're actually tagging it right there. We could be in it, man. We could consolidate a little bit here, give it some foundation, and then can continue along the trend. If we maintain this trend and didn't take this aggressive move up, this is where the market would have trended to right now, around the 39.45 and so. So, I mean, how to accomplish that is we either get aggressive and go right down to that 50% and then come make a move back up, or we just churn around here for a little while and kind of take out all the space. That's kind of filling in all the space if we turn around there for a while. That might be the move. So that just makes me uncomfortable, knowing that 50% correction could happen. But again, a little consolidation. I'm going to leave that trend line in, and we're going to watch that bad boy. We're going to watch that and see how it plays out throughout the summer if we hold that. If we keep bouncing off of that, that's going to become a good support, and then we could have our fears, and the old timer talking heads will come out and kind of reference that trend and say if we broke that, we've got some downside issues. The other issue I have is there's an open gap down here at 34.43. That always makes me uncomfortable because we fill gaps. So we've got that gap right above that 50% line. And whenever you have two of these hints or indicators coinciding, it's usually a pretty good target. Point in case, let's get rid of this. Point in case is you have this trend line from July, that's 50% right there. And then you have this, you have the Fibonacci from July demonstrating the 55% right there. And you have this trend line. And you could see, I mean, there's always a little overshoot. You could see that the market is kind of respecting this area and acknowledging this area where the two coincide. So you could see that when you have two means of going at the market and they coincide, it's usually a fairly good target. Dun-dun, dun-dun. Another point in case is you have this Fibonacci and then my midline on my anticipated trading range is around the between the 23 and 33%, and these are pretty considerate fib numbers. You know, if you look at the trading action, the price action, you could see that the market really respects those big fib numbers, and you got to allow for a little overshoot. You know, nothing's on a gnat's ass. So that's the finesse of trading. You know, it's not all point and accuracy. I'm getting old. I think Alzheimer's is kicking in. So yeah, man, that's it. That's what I'm looking at. That's what I'm watching. These are the things that are going through my head. Let's have a look at the market on a weekly, shall we? Dink, dink, dink. So, you know, crazy strong week. I love that, man. And you know what, dude? And dudesses, if we close the week like this, I'm going to be pretty encouraged, right? Because that's a really nice run up, a little consolidation, nice flag. We get a flag, a bull flag on a weekly, and I think that midline is a layup. I think we're looking at like 4,300 or so on the market. I'm going to be very bullish if we build a flag like that on the weekly. I'm going to be very, very bullish. And the month ended last month, so let's take a quick look at the monthly. Oh, diggity! That's last month, man. Really nice wick to the downside. I mean, a little heavy on the wick to the upside, although there's a lot of emotion in the market, and that's going to give us a lot of overshoot. I would have preferred a bigger head to call it a hammer. It's not really a hammer, but that tail to the downside is very encouraging. I know Kramer's been screaming the charts look like a beautiful summer. I haven't read his article yet, but I'll probably read it a little later and see what he says. But he actually has a chartist who's really, really good. And I mean, although he bounces around and exploits lots of people's work, but there's a couple of chartists that he pointed out that's really good, and I'm going to go see who he's referencing. But yeah, I could see it. You know, you could see it right here. I mean, we tagged that 55% on the monthly and put a big old tail in, and it looks like we're going to move up throughout the summer. Maybe grind our way up to the 46 or so. I don't think we're hitting that 48 just yet. We might even put in a divergence on the monthly towards the end of the summer, and then I bet September is going to be a real volatile month. So anyway, these are the things I'm looking at, the shit that's going through my mind. Hopefully you were brave enough to buy good stuff when it dipped. Yeah, you know, especially when we started talking about this divergence. And you know, it's not trading. I guess you could have done a few swing trades. It would have been a painful trade, just knowing how volatile the market is, and you know, taking this break, watching it pull down. Yeah, you know, swing trades would have been painful, but investments would have worked out really, really nice. You know, you should have been buying around this area when we were talking about this deviation, and if you did, you're feeling pretty good right now. I mean, a little on edge because you know this shit can turn around. I'm still not convinced the 125, 150 point days are out of the market yet. So I'll miss a little downside. Or I'll miss some low entry points just to get myself convinced on, you know, as far as swing trades go, as far as investments go, we should have been in. So anyway, I could babble all day. Remember, subscribe, hit the bell, hit the like. I really appreciate it. It goes a long way for me. All of my links are in the description if you care to contribute or participate in the channel. But subscribing and hitting the bell and hitting the likes is big. If you can share the channel, that helps a lot. You can check me out on Twitter, although I haven't been tweeting much. If you want me to answer any questions, just leave them in the comments. I'm happy to do it. I think my email address is in the description too. You could hit me up like that. So, Dave is accessible. So Anyway, everybody calm and cool when you trade. Get a little meditation in. Be at peace when you trade. And good luck trading.